Oh, guys, welcome, welcome, welcome. Come on in, come on in, come on in. I apologize. I am a little late. You know what? I actually thought, in fact, I did a whole presentation and thought I was live. So the joke's on me. So that was a lot of fun. I just did that for about 15 minutes. But anyway, so I'm here and you're here. And I want to make sure I value your time because I don't want this to happen again. Anyway, I see that we're live now. Make sure that you give me those hearts, those likes, those thumbs ups. Share the video because this is important information that needs to get out. And as you will, if you please jump in the comments and say hello. I love, hey, Roland, hello, 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 my friend. Thank you for jumping on. Share the video. Okay, let's how to get money out of the coming devastating recession. Let's do this again. Hey, Raphael, welcome. Glad you're here. Let's get this thing popping. This video is for educational and entertainment purposes only. Please consult your tax or financial professional regarding your personal situation. The bloodbath in America's trucking industry has officially spilled over into the rest of the economy. The inverted yield curve, don't worry if you don't know about that, we'll talk about it in a little bit, is a sinister sign of a forthcoming recession, and investors are freaking out that a downturn is not. Indicators from the trucking industry have, for the most part, most months, been warning of an economic recession as truckers have seen their pay slashed in what has been called a bloodbath in the industry. Freight recessions are often a leading indicator of when the rest of the economy is headed for a downturn. This year alone, some 2,500 truck drivers have lost their jobs as their trucking companies, large and small, declare bankruptcy. Major carriers like J.B. Hunt, Knight-Swift, and Schneider have been forced to cut back their annual outlooks. Hey, DC native, welcome. Glad you're here. Trucking is often looked at as a leading indicator of where the rest of the economy is headed, as 71% of America's freight is moved on trucks. Companies foreseeing needing fewer trucks is typically an omen of an economic downturn. If manufacturers are producing less and people are buying less, there's less of a need to move goods. Hey, Arlen, welcome, welcome. I appreciate you always jumping on. When the rest of America is headed for a downturn, freight usually dips first. A new report from Convoy's Economic Research Division said the industry went into a recession in April of 2006, more than a year before the rest of the economy was clobbered by the Great Recession, starting in January 2008. Hello, Emmy. Welcome, welcome, welcome. Glad you're here. And now it appears clearer than ever that the economy is headed for a recession. On Wednesday, investors everywhere were spooked by an inverted yield curve in which the spread between the 2- and 10-year Treasury yields fell below zero. The last time that yield curve inverted was 2007. The stock market had its worst day of the year. On that news, the Dow plunged 800 points. So we looked at that, and maybe you're saying, well, you know what? Guess what? I'm a millennial. I have time. No big deal for me. Pump your brakes. Not necessarily. August 26th, just a few days ago, millennials are already in debt and without savings. They got no money. After the next downturn, they'll be in even bigger trouble. So you might not be a millennial. Maybe you know one. Maybe your child's one. They're going to need some help. Will you be able to help them? And don't think seniors will escape. Seniors are still struggling to recover from after the financial crisis of 2008. They never recovered. And now here comes another one. Right back. Oh, thank you, Samson. I appreciate it. And NASDAQ said the looming recession will be worse than the one in 2008. So NASDAQ said it. I'm just saying they're pretty sharp guys. Okay, so let's jump right into what are some solutions. So what can we do about this? Thank you for the hearts. Thank you for that. I appreciate that energy. Thank you, thank you, thank you. It helps me out. Step 1, increase and protect your income. Adjust your W-4 to increase and take your take-home pay. I can help you with that. A lot of little details we have to talk about that, but definitely want to help you with that. As I said before, get rid of overdraft protection. All that does is protect the bank's interest, not yours. You will end up spending for a dollar candy bar, you'll end up spending $36 because the dollar candy bar will actually end up costing you $35 in overdraft fees. Get rid of it. You don't have to have it. If your bank tells you have to have it, you need to change banks. All right. And separate bank accounts for every day and your bills. Yes, because a lot of times as we get out here, we're moving and shaking. We're doing a lot of things. Your car could easily, sadly to say, easily become compromised. Now, guess what happens? Your bank account is blocked. All of a sudden, your rent comes back. Your mortgage comes back. Now you're having to pay that fee on top of the NSF fee. A lot of bad things can happen. Everyday account, one place. bills on another place. Give me a thumbs up, hearts, likes if this is making sense. Is this helping anybody out today? All right. Step 2, increase your credit score. Higher credit score to save you money, because guess what happens? A lot of times your credit card is dependent upon your credit score, and the interest rate is dependent on that. As that goes down, you may be able to negotiate with your current credit card company, get that interest rate down. You end up paying money, or you qualify for a new card where you can move that old balance at a higher interest rate onto a new card. You save the difference. All right. And also make sure that you're paying down your outstanding balances. That's called credit utilization, and that's a major factor in your credit score. One of the things we talk about most of the time is we talk about credit, your payment history. 35% of your FICO score is your payment history. Very important. However, credit utilization is 30%, is up to 30%. And so you want to make sure that you get that down as low as possible. Under 30% is the goal that you're shooting for, but the lower, the better. That increases your credit score. And also, heaven help you, we don't want that to happen, but heaven help you if you do lose your job, your low credit score may keep you from employment, because guess what? Employers are now looking at your credit score before they will hire you. Now, what your credit score has to do with you being a good employee, I don't know, but hey, you have to ask them, not me, but it is being a factor. So make sure that you get that credit score up as high as possible. Step 3, we want to reduce that debt. Reduce the debt, plug up those holes in your budget. Make sure that you may have memberships that you're no longer using. Remember that gym membership that you got that you probably not using anymore? Yeah, if you're not using it, you need to lose it. So save that money, put it directly into reducing your debt. Eating out, one of my favorite things to do, but I'm not saying you can't eat out. Just reduce the times that you do eat out and put that money, immediately towards your debt. So those type of things that you can do right now. Make sure you save your loose change. So you may come in, you're using the cash, not using your debit card so much, you're using that. Boom, you got change. Put that change right into a jar. End of the month, you take it to the store, you take it to your financial institution, they change it out for you immediately. Notice I said immediately. Immediately put that money towards your debt. Don't hold it, because what's going to happen, you'll eat out, and really the money will not have saved you at all. And stop throwing the money away on food. Remember, speaking of eating out, make sure that you eat what you have at home. If you have a refrigerator that looks like a science experiment and you're throwing food away, just visualize that as being throwing away money. Don't eat out as much as you usually do. Put that money directly towards your debt and empty your cabinets. Make sure that you eat everything up in the cabinet before you go and get new stuff, and that will help you reduce that that money, and that money can be paid towards debt. All right, now you have two paths that you can go. You can do it yourself, which is certainly available to you, or you can let me help you. Let me and my professionals help you reach the goals, your financial goals that you want to reach. Very simple. All you have to do is direct message me. I'll be happy to help you. Or you can go directly to increasemychecks.com and get information there. With that being said, please share this, likes, thumbs up, hearts, all that good engagement. I appreciate you guys jumping on. Hope you have a wonderful rest of your holiday. And I'm going to be doing this all day because people need to hear this information. And I will see you in the next video. Goodbye.